Hey traders, welcome back to the show. As always, I'm your host Akil Stokes, and today we are going to answer the question of what time frame should I be trading on? Speaking of questions, a common question that I get from you guys is, hey Akil, I'm new to the Trading Coach podcast. Where should I start? Well, I suggest you start with episode 000. That gives you a nice little introduction to who I am, a little bit about my trading journey. That way we can connect a little bit, as I did a lot of the dumb stuff that you probably have done or were going to do before starting to listen to this podcast. But after that, I would say simply take the 10 episode challenge, meaning scroll through, find 10 episodes where the title looks cool, something that you want to learn about, or just Google search what you want to learn about and see what episode comes up and listen to those, right? There's no order you have to listen to them in. They are here as a reference guide to help you learn and enjoy. So like a buffet, pick and choose what you want. All right, let's hop into the show. Yeah, I think the first question you need to answer is like, when do you want to trade? Right? Remember, trading is this cool thing where, especially Forex trading, which is 24 hours, where you have this freedom of you can trade whatever you want or whatever fits you, working around your lifestyle. But you have this this question you have to answer of like, what type of trader is, especially if some people are forced into a certain category, right? So there have been like a lot of truck drivers here at tier 1 where it's like they can only trade the daily because like they only can kind of stop and check it once a day, or stuff like that. So sometimes you're forced into a specific trading time frame. But if you have freedom, I think the first question you want to ask yourself is, when do you want to trade? Do you want to be a swing trader? Would you rather check the charts once a day and get a signal? Is that too little? Would you rather check it a few times a day? Do you want to be active, have more action, see the market go up and down? I think a lot of it depends on what you want to do, because if you want to be like, so I aspire one day, not anytime soon, but one day when I'm very, very, very old, right? Or very, very older than I already am, right? I aspire to be a trader that just pretty much checks the chart once a day, right? I want to be a lazy bum. I want to come in once a day, check a daily chart, know if I have a signal or not, take like 5 minutes to do whatever I need to do, and then wait 23 hours and 55 minutes until I check it again, right? But that's not right now. I'm thinking like when I'm old in retirement days, right? But if that's something you want to do, then a higher time frame makes sense. If you don't want to make a big time investment in your active trading, and I say active trading because you do need to make a big time investment in your education and your learning and your journaling and stuff like that. But if you don't want to make a big time investment in your active trading, go for a higher time frame. Daily, weekly. If you want to be kind of more, if you want a lot of action, if you like the feel and the taste and the smell of like moving markets, like being in the mix, like, I've been up in New York a few times over the last month, and my wife absolutely hates it, right? You guys ever been to New York City or any big major city? New York, LA, Tokyo, London, kind of. Right? It's very busy. There's always something going on. There are people walking in the middle of the street, hopping in front of cars. There's bikers everywhere. There's always action, right? They call New York City the city that never sleeps. I remember my family's from New York. So I remember growing up, I went to get a haircut, and my cousin walks me down to the barbershop at like 2 a.m. I'm like, wait, what? Why is it open 2 a.m? He's like, someone always needs a haircut. I'm like, okay, yeah, makes sense. All right, let's go. So I'm always teasing my wife, like, hey, we should go to New York, the city that never sleeps, right? But it's like, no, that's a lot of action all the time. Some people love it. Some people want to be in the middle of that mix where it's like there's always something to do, there's always someone to talk to. Other people would prefer to be more laid back. Like, hey, I like to chill. I like relaxation, peace, quiet, stuff like that, right? So if you want that action, day trading is going to be a good environment for you. A lower time frame, a range bar chart, a 5-minute chart, a 15-minute chart. Those things are going to be moving. There's always going to be something to watch. And then if there's something right in the middle, if you kind of want more action than just checking your chart once a day, but you don't want it to be as hectic as all this stimulation and everything's going at once, then you want more of an intraday swing trading time frame, maybe more like an hourly, where there's movement, but you still got an hour before your candle closes. So you have time to woosah, breathe, or a 4-hour, where it's still going to be movement. It's a little bit more than the daily, but not as much as the hourly. So the first question begins with, what type of trader do you want to be? And then you want to venture down that path of what strategies work with the style of trader that you want to be. So, just to recap, and again, we had the podcast that is scheduled to come out August 1st on this. We talk about advantages and disadvantages of energy, but obviously the lower time frames are going to take more active energy and focus because they're moving. The higher time frames are not going to require as much active time and energy and focus. The lower time frames you need to have quick decisions. You need to know your trading plan in and out, because you can't afford to kind of double check and make a mistake, right? We were speaking to a trader this morning. I don't know if you guys saw it on the chat. I know some of you guys did. And I know you were typing and then deleting, right? But we were speaking to a trader this morning on the chat who had a question about advanced pattern formations, and I asked him, hey, what are the rules for this? And the trader didn't remember the rules, and it ended up being because they rushed through the courses and all this fun stuff. And I was telling them, hey, don't rush through, because small things may slip through the crack, and it may not seem like it, but a small detail like identifying a bad invalid pattern versus a good one, that's going to have a massive trickle-down effect in the rest of your trading. Imagine you do back testing and you're identifying all bad patterns, and then you're freaking out because your results aren't what you want them to be because you made this one small mistake. But that's the same thing as day trading, where it's like, hey, if you don't know your plan inside and out, something may happen, and because you have 5 minutes to figure it out, you may not have enough time to go through your trading plan and double check. You got to know it, and you could end up taking some bad patterns or bad setups because of a small mistake where it was a higher high, higher close, or it was a wick that did something, right? I made all types of mistakes day trading because you just don't have the time. So that's one of the negatives of day trading. One of the hard parts about swing trading, I guess one of the positives about swing trading, is you have all the time in the world. If you're trading a daily time chart, you got a full day to research, man. I mean, you can take a journey to the trading mecca and come back and ask the old wise one for the answer, and then come back and still have time to trade the charts. The old wise one being me, of course, old wise Akil. So much wisdom in this head, it burned off all my hair. Answers I give. Ooh, I should do it like in a Yoda voice. Answers trading seek you. But you have time to do all that stuff, right? And by visit the mecca of Akil, don't come to my house, I will shoot you. Just send me an email. That is a much safer way to do it. I'm very paranoid, born and raised in Philadelphia, PA, where people got shot all the time for reasons I don't know. So I'm extremely paranoid. Do not come to my house. It is a warning of what will happen if you do. But you have all the time in the world to research stuff like that. Now, the bad part is if you're someone that gets in your head, I don't know if you guys have ever had a trading signal in advance, knowing that man, okay, I'm going to have an entry at the end of this candle, and then you got to wait a full day for the end of that candle. It will drive you crazy if you're not, I guess, emotionally experienced, I guess you can say it. And I suppose everyone's different, but for me, I hate knowing there's a signal, and I hate waiting for it, because now I'm looking at the chart, and every time the candle clicks down, I'm like, it's taking my profit. It's taking my profit. My risk reward is worse. My risk reward is worse. or I start overthinking it, like especially if you're someone that's afraid to get into a trade, which many new traders are. Now you have all the time for those fears to like line up, right? I had to do a speech at I don't get scared of public speaking, but I was looking at my cousin, and we had to do a few speeches at a funeral we just went to, and like you can tell like he was the last one. I was the first one to go, so I had to boom, knocked it out right away. I was looking at him while I was doing mine. He's the last one to go, and you can see him like starting to freak out because he's just overthinking. He had a plan, but then he's overthinking it, over this waiting and thinking about everything that can go wrong. And it's like that stuff happens in trading as well. You kind of overanalyze, and we had a trader here on the platform who would even convince themselves not to get into trades. He would have his trade all lined out. And I think it was 4 hour, not daily, but he had to wait whatever many hours to enter the trade. And he said by the time the time came to enter the trade, he wouldn't take it because during that 4 hour waiting period, he would in his mind, he thought he was double checking everything, but he was just convincing himself of ways not to get involved. He would start looking at structure that wasn't there, he would draw in fibs and pivot points, and that self-destruction is kind of real. So that's one of the negatives. So yeah, start with, if you have specific limitations in your life, start with what trading style, time duration fits around those limitations. If you're all open, figure out what type of trader you want to be. Higher time frame, lower time frame, or you can always be both. I did both for years. I was a day trader and a swing trader for years. It took up all the time in the world. I got nothing better to do than stare at a chart all day, but you can certainly do both. So, and any other words of wisdom on that? It's kind of just personal preference, right? There's no formula to it, unfortunately, but it's the cool thing is you do have that choice. All right, next question. Hope you guys enjoyed the episode. Remember, take that 10 episode challenge, find 10 Trading Coach Podcast episodes that look appetizing and dig in. If you like what you hear and you find this podcast to be helpful, do me two things. One, hang around and be a frequent viewer. We release episodes every Monday, Wednesday, and Friday. And two, leave me a rating and a review, just saying that you love the show. It's a great way to support what we're doing here. It's how we've moved up the rankings and are considered one of the best Forex podcasts out there. So I appreciate your support in advance, and I'll see you guys next episode.